Ladies and gentlemen, distinguished guests, friends, and a few enemies, I'm very happy to welcome you for the first session of today. Until the lions have their own historians, wrote Chinua Achebe, the history of the hunt will always glorify the hunter. And today, ladies and gentlemen, for this fourth session, we have lions in the room. We will talk about pitching Africa, attracting investments, and for this, I have four amazing speakers for this one-hour session. I would like to welcome first on the floor Alain Bobisse, CEO of Africa 50, and you can applaud him while he comes here. Alain. Marie Diron from Moody's. Tarek Sonaji, CEO of Casablanca Stock Exchange. The third one. And the president of Kia Motors, Mr. Song, please. I'm sure we will find Alain Bobisse on the way. A little bit closer. Down. Can you guys hear me? No? Okay, now you have sound. So I started this conversation by saying that we have lions in the room. We're missing one lion, which is Alain Bobisse. I hope he will join us during the conversation. Standing alongside these gentlemen, I'm pretty sure what's my place in the global food chain. Pretty low. So I must be somewhere between a gazelle and a zebra, because we have around 200 billion of financial, industrial power next to us for this session. And of course, ladies and gentlemen, we are here at the Governance Weekend, so our starting point would be the amazing report that was published by the Mo Ibrahim Foundation about the issues at stake. And ladies and gentlemen, I'm sure you've all read the reports. Africa has the world's youngest population. Africa offers the highest return on investment. Africa is the future. But despite all of these headlines, capital is still struggling to get to Kinshasa, still struggling to get to African capitals, because, you know what? Let's be very frank about this. There is a trust gap. There is a risk perception gap. And let's be honest, sometimes there is a capacity to absorb gap as well. But I have good news. We're not here to complain. We're here to pitch from the ground, and build on the experience that we have in this room. So, according to the report published by the Mo Ibrahim Foundation, Africa offers the highest return on investment globally, but it captures only 4% of global FDIs. And the problem isn't potential, mostly it's perception. And the mismatch is growing. The continent is being told to leap into the future with yesterday's tools. Its share of official development assistance has plummeted by 11 points, even as the climate adaptation needs exceed 1.6 trillion. As Dambiso Moyo once said, trade not aid, or more recently, Dr. Ngozi said that aid is a thing of the past. We need to rethink the narrative of Africa, and we need to rethink the way we attract private capital. So, before we jump in, I'd like to introduce the exceptional panel we have today, who are not just leaders, but also doers, impacting every day the perception of Africa. Marie Diron, I'll start with you. Every time you enter the office of a finance minister of Africa, sweating begins. They don't know what their rating is going to be. So they fear you, and they want to have a constructive dialogue with you. But today, you are on the other side of the equation. We get to grill you and ask you questions about what's happening in Africa. And for you, we have a very special set of questions inspired by the great American poet, Janet Jackson. What have you done for us lately? Next to you, we have the maestro of listed companies in Morocco, Tarek Sanhaji. You lead the Casablanca Stock Exchange, and you're iconic of these neopats, the Moroccan who succeeded abroad. You were in the city in London, and you were brought back to Morocco to lead the Sovereign Fund of Morocco, and now you are the head of the Casablanca Stock Exchange. A few figures about Casablanca Stock Exchange: around $100 billion of capitalization. 30% of it is in financial services and bank, 10% in telco. So it's a vivid place for investment. And of course, we're very much humbled, and I'm sure in the room there are a lot of questions. Mr. President Ho Sung Song, you're the president and CEO of Kia Corporation. When a Korean car maker comes to Marrakesh, to the Ibrahim Governance Weekend, ladies and gentlemen, this is not a CSR move. It's a tectonic shift. So we'll ask you, why are you here today with us in Africa? And I'll start right away. We'll go from global to very specific questions. And then maybe, if we have time, because as you know, we have time constraints, we'll take one or two comments from the audience. So I'll start with you, Marie. As head of sovereign risk at Moody's, you literally shape how investors price Africa. And we've seen the numbers. If you look at the gearing point of Africa, if you look at the ratio between debt and how countries are getting their risk perceived and how they raise money, there is obviously a gap, and Mo Ibrahim has been a very strong advocate for changing this gap. So Africa receives high returns, but low flows. What's still missing from the macro picture? Are we seeing a mispricing of Africa, or is there a real risk, in your opinion?
Yeah, thank you. Thank you for this. First, maybe to the question, or Janet's question, what we do, and you said that we shape flows. What we do with our ratings is we provide an opinion about a government's capacity to repay debt in time, in full. Investors use this opinion alongside a variety of opinion, their own analysis to factor into their decision. What we've done recently in my team is really looking at the data in light of really this debate like we're having in the last few days. What is driving the cost of capital in Africa? And first, there's a question about perception. I think I've used I've heard that term quite a lot in the last few hours. So let's look at the perception against really the actual reality of risks. We've looked at the sovereign default in the last four decades. Globally, we rate 140 countries or so. We've seen 50 sovereign defaults, and we rate 28 sovereigns in Africa, and we've seen over that period about 10 defaults in Africa. And what we see there is that first, the ratings deliver in terms of an appropriate rank ordering of risks. If the ratings are to help shape these opinions, these investment decisions, then investors need to have that reassurance that when they see the letters and the numbers, they know what it means. And that's what we see in the data. So you take a B rating, it means that the probability of default is 6 times less that of a CAA rating. And in turn, it's about 5-6 times more than a BA rating. So the rank ordering is borne out by the data. Second question on the perception is that the ratings that we provide are addressed to investors globally. Look at maybe sovereign in Africa, but also might be looking at a sovereign in Latin America or in Asia. So they need to have that confidence that wherever that sovereign is, the meaning of the rating is the same. That is, again, what we find in the data. A B2 rated sovereign in Africa has a probability of default of about 5–6% over the following 2 years. Exactly the same as that probability for a B2 rated sovereign globally. So that rank ordering and that consistency is very important for our opinions to really have some value. So then when we get to drill down to what drives then the cost of capital, we look at the data, but really decomposing, and some of the data in the foundation's report were really interesting on that. Let's decompose the cost of debt depending on its sources. As we've said, Africa relies to some extent on external financing coming globally. And there we see that the cost of financing, the spreads, if you want, on external debt, are not systematically higher for African sovereigns compared to sovereigns globally. I'll get some examples because it's easier. We're here in Morocco. We heard from the minister earlier about a very successful issuance. That was not a one-off.
Better than Romania. Romania had a higher note than Morocco, but Morocco got money at a better rate.
Morocco is rated BA1 for us, and faces spreads of around 150 basis points, lower than that of Brazil, also rated BA1. Cote d'Ivoire, BA2, faces similar spreads as Georgia, also rated BA2. So you can go down there, and you see that these perceptions are not systematic, or are not at least based on geography. My last point will be then an important part of the debt stock is local, is domestic. And that is where we do see very significant differences in cost. If you take the cost of domestic debt in Africa, it's about 12%. That is significant. If you're financing projects over 10, 15 years on really deep infrastructure, that's going to be costly. That compares to about 8% for Latin America, about 5% to Asia. So we're drawn to really looking at what drives the cost of domestic debt, and I think there's a lot in the Foundation's report around that domestic market infrastructure.
Thank you very much, Marie. So basically what you're telling us is that sometimes perception is reality, and this is how the market reacts to it.
What we're saying that the data do not borne out a systematic kind of different perception for the continent compared to others.
So perception is reality, but I can tell you that this is no hologram. This is really Alain Ebobisse, who just joined us, ladies and gentlemen. You can give him a round of applause. Thank you, Alain.
Yes.
And Alain, I got the chance to introduce your fellow speakers, but I have to say something, and I have to share a story with the audience today. You prove, Alain, every day that leadership is not about, words, long-term vision, but about adaptability. I ambushed you this morning at breakfast, right? And I came to Alain Ebobisse and I said, hello, Mr. Ebobisse, my name is Abdelmalek Alaoui. I would like to ask you for a huge favor. Would you be so kind as to replace Aliko Dangote this afternoon in the panel that we're going to have at 4 o'clock? Some leaders would have asked for another coffee. Some others would have asked me to call their assistant. But you looked at your agenda and you said, sure, I have to change some things in the agenda, but I'll make myself available because I think it's a real issue. So ladies and gentlemen, we can thank Alain for being with us today. And by the way, I told him the room will be full with 100 of decision makers, so I put some pressure on you. But Alain, you bring to the table on this conversation tremendous experience. You've worked at IFC for a few years, and you're leading, of course, Africa 50. So at the beginning, I said that I had 200 billion in the table. I can add the 50 billion with you coming in this conversation. And naturally, I'm very happy to ask you the first question when I find it back on my notes, because obviously I had to write it. So Africa 50, you've been at the forefront of bridging the infrastructure gap by structuring investment projects and unlocking private capital. What are, in your opinion, the essential enablers that can attract institutional investors at scale? Because the issue right now in Africa is scale. We have tremendous work to do in order to build these infrastructures.
Yeah, thank you, Abdelmalek, and I apologize for being late. And just so that everybody's cleared, when you asked me the question, I said I would do it, but I also said I cannot replace Aliko Dangote. I believe I said that because I want to be very clear that Aliko is my big brother, and I admire him. I'm just a little guy.
I have to say another thing about leadership, and the difference between you and Aliko is that you keep the same phone number while Aliko changes his number every month.
Aliko is my guy. It's my brother. So, and also I spent about 17 years at IFC. I was the global head for IFC Infra Ventures, doing infrastructure projects across emerging market. Look, at Africa 50, what we are demonstrating is that we can actually invest in private and PPP infrastructure in Africa with speed and make money and deliver impact. Now we have to leverage the platform that we've built to achieve scale, because the issue that we have is to attract different pools of capitals. So we've been reasonably successful in attracting the capital which can write $20 million check, maybe up to $50 million checks. We need to be able to attract the capital that will not talk to you if you talk to them about something below, $500 million. Or my brother Bayo Gulezi will tell me, if you're presenting a project that is asking for less than $1 billion, don't talk to me. So what we need to do on the continent is to build on what we know, what we have done, which is projects that have delivered return and impact, and trying to make sure that we can aggregate some of those projects in structures that will attract investors who are looking for scale. And we're able to do that because, again, we talked a lot about what doesn't work. At some point, we also have to talk about what actually works and how we can build on what works to do more. At Africa 50, in about 8 years of operation, starting almost from scratch, the African Development Bank is our shareholder. They started us. We have 33 African countries as well, plus 2 African central banks, Bank Al Maghrib of Morocco, BCAO, and PIC, the Public Investment Corporation of South Africa. So what we've done is, over the last 8 years, we've invested in 28 projects across 29 African countries, equity, quasi-equity, to show that actually you have those investments on the ground and the portfolio quality is good. Now it's about scale. Scale requires predictability. Scale requires the fact to show what you've done before, not aspirational. Say, this is what we have done, this is how we've made money, we have exited a few projects. One project we exited at 16.5 US dollars RRR in dollars. The other one at 13.5 we exited. So because exit is also a challenge. So for me, it's about picking the areas where we see market acceptability. Power, for example, gas actually. Gas is today a place where I think some investors are very comfortable investing in gas. And we can put together a platform of gas asset. We can put together a platform of transmission PPPs. Again, it's about creating structures, designing those instruments that will be attractive to those large-scale investors. Otherwise, we will continue to do. Final point. We have to focus a lot more, like a lot more on mobilizing domestic institutional investors, regional institutional investors from Africa. They are sitting on a lot of money. At Africa 50, we did something which remains small, but we brought together 20 African institutional investors to back our Africa 50 Infrastructure Acceleration Fund. Never done before. 20 African institutional investors, sovereign wealth funds, pension funds, insurance companies, bank to back that. From here, Africa, only 2 non-African investors. Now, I can tell you that when we go global, with those African investors backing us, the conversation is different because we have people in our backyard that believe in us. You cannot go to the global market and not have African investors with you. It doesn't make sense. To change the perceptions, Africans need to invest in Africa. Now, that means that we need to give them the product that they feel comfortable. We've been able to do that. Again, now it's about scaling up.
Thank you very much, Alain. Tarek, let me turn to you, not only because we're the only ones wearing ties, but for a concrete question. Alain just pointed at you directly, like Kaiser Soze in Usual Suspects. He's talking about mobilizing resources from Africans, and you lead the stock market. What are, in your opinion, the missing point? What are the concrete levers to scale this vision? Technology, regulation, political will. How can we free the money of the Africans for Africa's development?
I think that's an important point. So let me first say that capital markets, they should be the foundation of our development finance. Aid, I mean, we saw the discussions today about we don't need more aid. We have to take care of ourselves. Africans should be writing their own checks. And for that, we have to have sovereign capital markets. Now, that's important at several levels. The first one is the financial sector is a great governance vector. It's not only for funding, it brings much better responsibility, much better transparency in your economy. If I take our example in Morocco, I'll start with banking and then I'll move to institutional money. In Morocco, over the past 30 years, Moroccan banks witnessed a great transformation. And within that transformation, they, I would say in many ways, helped as well transform the country. Inspired by the vision of His Majesty, they are now true continental champions. They are represented in 34 countries, but most importantly, they helped with infrastructure development, they helped with SMEs, they helped with financial inclusion. And so banking is a great enabler. But if we want to move to the next level of acceleration, we need capital markets. Why? Because our markets, they don't only fund companies. They price your futures, they monetize and encourage good governance and good management vision. And so it's very simple. A well-functioning stock market is the only financial tool who gives you today the worth of your company tomorrow. So you can see how that's rocket fuel for acceleration, but also for good governance and also having an unbreakable bond between investors and issuers.
So what's preventing African companies into getting listed? We're at Governance Weekend. Is it governance? Is it fear of the markets? Is it fear of transparency?
I'll summarize it very simply. Trust is the currency of our markets. If you don't take the time to make trust happen, that's something that is slow, but once it compounds, it yields enormous benefits for everyone involved, whether it's the investors, whether it's the companies, but also the nations. So let me tell you a little bit about what we've done, because we've gone through a similar exercise. And that exercise was first the remark that why are we always running and making so much effort trying to attract foreign capital while local and African investors are engaged and most importantly underutilized. So what we've done in 2021, and you know this, but for our international audience to know, in 2021 we decided to really listen. So we launched a wide consultation with all our local stakeholders. Tell us what you think about the stock market. And we didn't hear only good things. Actually, we hear mostly bad things. The best way to summarize it is one high-ranking official who told me, Tarek, your exchange is a great locomotive, but this doesn't have any rails. So essentially, we had a fantastic technical product, but our clients didn't project themselves, didn't see themselves, and they were intimidated by what we are doing. So we had to change, and we understood that the main change was not technical, not necessarily what you are saying, but the main change was about culture. And that change had to come from within. So we decided to change a lot of things within the exchange, mostly cultural, not technical. So we changed the way we approach and we engage with our stakeholders. We changed the way we communicate with the world, and also we engaged a lot more with the larger public so that they become vector of what we are doing. The results, actually, the transformation has been incredible. The last 2 years, we've managed to have the best result we've had for the past 15 years. Retail activity quadrupled 4 times. Local investors now are 90% of the market. Internet trading is 75% of our activity. And also we managed to build strong bridges with private equity. That means as well having a pipeline for the future. And so that's back to what you said, back to basics. And I've always been told when I was young, and I remembered it, if you have an investor who already put a ticket with you, he is 5 times more likely to have a second ticket with you than finding someone else. So we have all the money here, maybe not to cover all our needs, but as Alain said, to kickstart something very powerful. And I can tell you in our exchange, people are very excited about the recent changes and what it entails for the future.
But still, IPOs are still scarce.
IPOs are scarce up to a point. Last year was a record in terms of funding because we had a lot of capital increases, and we think that change is going to come. The IPOs will come, don't worry.
Thank you very much, Tarek Sanhaji. Let me turn to you now, Mr. Ho-Sung Song. I'm sorry if I don't pronounce your name correctly.
Yeah, Song is okay.
I hope it's okay. Tarek Sanhaji just said that trust is the currency of the market. And you being here today in Marrakesh, in Africa, is a signal in itself. Africa is no longer marginal when you have a car maker from Korea come into Marrakesh to speak to this audience. From a global corporate lens, in your opinion, what still makes us as Africans and as a continent feel like a frontier market rather than a core market? What would you need to see at the policy or infrastructure level to commit to a major scale-up, to something that will disrupt and change the automotive market and industry in Africa?
Yeah, thank you for your questions. Africa is well known for its potential for the future growth, especially with the fastest growing populations. Likewise, I believe there is great potential in automotive business too. In order to build strong foundation for growth, I would like to mention about 2 issues. First, the new car market is important. The automotive industry is a very highly complex field with very high entry barriers. With the manufacturing plant established, parts industry will come in, as well as infrastructure and logistics and so on. Gradually, they will together form an expanding ecosystem. In order to attract such a large-scale investment and ecosystem, it is crucial to have a solid new car market that can at least support minimum level of economies of scale. There are more than 3 million car demand in Africa, but new car demand is limited to only 0.8 million cars, where used car sales account for a large share of 2.3 million cars. So regulations for the import of used car are important to restrict the age of used car, emission standard, and safety measures and so on. The second, the major scale-up is important, as you mentioned. The biggest interest would be the investment and bring in local manufacturing of cars, maybe ultimate goal from the regional perspective. Such investment would require several basic conditions such as adequate infrastructure, a skilled local workforce, and favorable environment for large supply chain and so on. Furthermore, to effectively expand the size of the new car market, free trade agreement on the automotive sectors within the African countries should be strongly promoted. That is my opinion. Thank you.
Thank you very much. What you're saying is that we need a stronger middle class in Africa so that they can afford to buy new cars, and the ramping issue of used cars being imported to Africa is really still a dominant issue. And if we want to tackle these challenges, we need money. So I'll turn back again to you, Marie. As you know, Africa is the continent of innovation. So let's explore a little bit risk innovation. We talk a lot about blended finance, green, diaspora bonds, sovereign guarantees. But are these really shifting the needle when it comes to cost of capital in Africa? From your seat, are there any tools that we didn't see? Are there any innovations that we could leverage? Can we go even further than these instruments that we have been witnessing for the last 10 years in many reports, in many institutional languages, in many, I would say, languages used by ministers of finance? What did we miss till now in risk innovation?
Maybe let's talk about blended finance, which can cover a lot of the topics and labels that you mentioned here. Blended finance is very much present and active in Africa. There's a really interesting organization called Convergence based in Canada that does, every year they publish a report scanning the blended finance landscape. And you see that according to their data, about half the blended finance flows go into Africa. What is interesting is that, to answer your question, there is an increasing diversity of instrument being used, but the but is indeed on scale. That the average transaction, I think, has reached about 65 million, not the billion that you were talking about, quite far from that. What we see is that we, as a rating agency, we see blended finance transactions come in when we ask to provide a rating on a bond issued with a partial guarantee, or on maybe some securitized deal on project finance, where there's a blend between a concessional financer and private sector. And we see the whole range. The credit benefit is really directly related to the portion of risk that is transferred to the higher rated, the more creditworthy partner in these transactions. An example, for instance, is a transaction in Kenya to finance student accommodation under the kind of label of ACORN. That came with a 50% guarantee from Guaranco A-rated entity, and so the uplift there was worth 2 notches, and then commensurate with a lower cost of finance. But if the terms of that credit enhancement are specific to certain type of risks, are specific to a portion of the project or the transaction, then nearly by definition, the benefits in terms of whether it is in ratings uplift or in terms of reduction of costs will be commensurately kind of a portion. So there are interesting developments on securitization. You mentioned Africa as really innovating. African Development Bank was, of course, the first multilateral development bank to securitize a portion of its portfolio. And we are seeing more multilateral development banks looking into that space. And that might be really a means to achieve scale, once again, because it does provide then the diversity that investors are looking. With transactions in the 50 million type of benchmark, that diversity is not going to be achieved. But through securitization, that can be a means.
And building on that, how do we as well resolve the issue of very large corporations that have their rating very much linked to their country's rating? Yeah. Because this is something that is very important, because if we want to build large multinationals across Africa, and they cannot go above the rating of their country, that's a big issue for them when they want to raise capital. How can we solve this conundrum?
So from our perspective, it's really what is the nature of the credit risk. And if that large corporation is really embedded in the country in terms of sources of revenue, location of assets, financial or real assets, really subject to the country's legislation and regulation, then there's a very close link between the country risk and that of the corporation. But we do see corporations that then diversify in terms of their asset base, their revenue sources, and that allows them to diversify the risks and potentially move away from that country risk.
Thank you very much. Alain, I saw you raising your eyebrows when I was raising this question because I think you have a few ideas in mind. But let me ask you my question before you react. You spoke in the past at length about turning infrastructure ideas into bankable projects. What are the bottlenecks? Is it project structuring? Is it governance? Is it the perceived risks? And the same question as for Marie, what moves the needle today? Is it PPPs? Is it frameworks? Is it blended finance? How can we go beyond the current state?
All right. First of all, the transaction that you mentioned, is Mary?
Yes, yeah.
It's called Room to Run. It's a synthetic securitization by AFDB. We were an investor. It was a good transaction, and we made decent money, and we want to do more of that. So just to mention in passing. Project development, which is really the technique or the activities to transform an idea into a project. It is so essential, and sometimes I wonder why we're not spending as much time on it, because a lot of people are announcing big amount of money to be allocated to Africa or to other emerging markets, and most of those funds which are raised are not getting deployed. One of the reasons is that there is not enough, there is some, but not enough bankable investment-ready project in which these investments can come in. The project development capabilities are rare, risky. At Africa 50, we decided to focus on that. I like for more people to work on project development to build up the pipeline, because it's relatively easy to wait on the sideline for somebody else to build the pipeline and then fight for a piece of equity or debt once the project has been developed. And if we do that, then the supply of projects will be too small. We won't achieve the scale. One of the reasons why Africa 50 today, we believe we are ready to achieve scale, because we spent the last 7 years developing projects. Today, I am probably Africa 50, one of the few institutions where we have a lot more pipeline than capital. Why? Because we spend a lot of time developing projects. And we have a competitive advantage because we are owned by government shareholders. So we have this trusting relationship where we have access to projects, but we also have to spend money and technical resources, people, to develop the project. It's very important. It's not only about the money, it's also the expertise to get the project from the early stage to the later stage. Now, there are projects which are easier, ready to develop, and I'd like to argue that we should focus a bit more on that. It was mentioned this morning by Vera Songwe, asset recycling. Governments are sitting on a huge pool of commercial assets which they own. Why should they continue to own those assets when they could concession those assets to us and others and bring institutional investors to fund those assets, recycle the money, the government will get the check and put it in new project, asset recycling. We did one such transaction in the Senegambia Bridge, $100 million financing by AFDB, Toll Road, the Minister of Finance, we agreed, they concessioned the asset to us. Today, they're getting more than $100 million. The Minister of Finance of the Gambia is one of the happiest persons because he has a money, liquid money, as opposed to a bridge. The bridge will manage it, and then we're also managing it efficiently. So these are the kind of assets where you can develop more easily. To finish, the success brings success. We need to create successful example of things, infrastructure project that works, and we do have some. We need to talk a lot more about it. We need to make sure that people know about the story, and then pull those projects together to achieve scale. But we need to talk a lot more about our successes as opposed to always lamenting on what doesn't work, which we have plenty of.
And you mentioned, of course, talents and skills. I
Yes.
think from a personal perspective, we were in Rabat a week ago, and I think Africa 50 was doing a huge team building with your resources. They were working on how to work better on the project, how to work together. They were in a big hotel in Rabat, right?
Well, there was in a nice hotel in Rabat.
Okay. I didn't get the name because we're at the Mo Ibrahim Forum, so we don't make any advertising for anybody.
Okay.
But Alain was speaking about this immense resource that Africa has, which is talents and skills. And we already spoke about the fact that IPOs remain rare. Isn't there some cultural thing that we need to change, which is that a lot of African companies are family-owned companies, and they still need to work on the culture of their companies. They need to take independent board members. They need to train their people better, and they need to unlock the potential of their companies, because we see them struggling at a size of $40, $50 million, whereas they can do a P&L of 500, 600 million. What's the biggest changes that we can do in African capitalism to take it from these SMEs, family-owned, to companies that are well-run, well-managed, and that are looking towards the future?
You're looking at me, so
Absolutely, I'm looking at you.
Let me very quickly just concur with a very important point that Alain said about the importance of sourcing projects. We spend too much time on trying to chase capital, and if we put as much effort into, getting projects to a good level where financial investors can look at them, I think that will have a lot of more impact. So I want to salute the recent initiative of the Mohammed VI Fund for investment, because it's not only a sovereign wealth fund, it's a new breed, it's a sovereign development fund. It's a sovereign fund for developing projects, and I think that's an exciting initiative to follow. Now, I am going to answer your question with a provocative statement. So we have all day seen this motto, the Africa we want, but shouldn't we add a second line, which is the Africans we want to be? Because that's a lot more important when you are doing business. I mean, look at Korea. It's a remote country which has no natural resources, very difficult logistics.
Always used when you want to do benchmarks about Morocco, because they were at the same level of development in 1961.
Yeah, but more importantly, I think it's really important. I really think we are not spending enough time about devising time and resources and importance to devising human resources management system for African countries. And I think this is something which is a lot more important. You ask, and you've been around more high-powered people than I've done, but they've all stayed the same. If you take a good business and you give it to a bad manager, he kills it. And if you take a bad business and you give it to a good manager,
then you create a hedge fund.
Yes, but the most important here is that the capital has to be human capital. And I think we have to spend time to think about a business culture that espouses our traditional values. Values about, what you are giving back to the community. Values about fortitude and about, as well, empathy. American companies are coming back to this. But we have this plenty from our fathers and our forefathers, and we don't listen to them. I think it's very important now. I see people come in the interviews, and they all want to make a quick buck, and they think that everything is easy. And I think it's important for the wise heads in this room and elsewhere to say African business culture, which is going to make us grow, is something which is based on empathy and on our let's say, strong links with our communities. And this is something I've noticed in Morocco, and I'll go maybe even beyond business. But, 2 years ago, we've had a terrible tragedy, terrible earthquake in House region not far from here. And it was terrible for us, but as well, it was quite unbelievable. Moroccans, they've been taken back by this huge surge of solidarity. Solidarity, obviously, which is inspired by the values that we are rediscovering. And I'll have to say it's no small part thanks to the wise and benevolent spirit that His Majesty has instilled into this country. But I think it's very important that we think about long-term investment, long-term planning. I'm not talking about education. Education is important. But as it's important is I think the wise heads of businesses in each African country should put their head together and say, this is how we want to work. Thank you.
Thank you. Thank you very much for this very powerful message, Tariq. Mr. President, let me turn back to you. Tariq just highlighted the importance of having a culture, of having these African managers come back and develop their countries and participate in the development of companies. But in order to do that, and especially in industry, we need energy. And as you know, the global transition to electric vehicles is reshaping completely supply chains.
Yes.
Yes.
We need much more capacity in Africa, but we hold a critical share of the minerals that are involved in the production of batteries and in the production of car making at large. Is there a viable path for Africa to become a processing and manufacturing hub in that equation, or are geopolitics, logistics, and energy constraints still blocking that ambition? Will we see one day a fully integrated chain of value, a value chain with all the minerals to do the batteries in Africa, to be able to build those cars in Africa, and to sell them to this emerging middle class that we have in the continent?
Yeah, thinking about the environment, I believe the electrification in automotive industry is inevitable. And climate change has become a critical challenge that we as a global community must address together. And for the transition to electrification, battery is one of the key elements where you mentioned the mineral take a critical role. So Africa's share of minerals definitely is a significant opportunity drivers in mid to long term. Mining and processing of mineral could be less restricted by limitation you mentioned, where manufacturing hub could be a whole lot different story, referring to local production of battery and electric vehicles. The EV market in Africa is showing a steady growth each year, yet the pace of electrification is not fast compared to the leading EV market like in Europe. In order to stimulate the transition to electrification, strong government-led initiatives are important. Particularly two major barriers of electrification are the price of EV cars and charging infrastructure. In case of a leading EV market, government finance support for EV consumers and collaboration between the government and all stakeholders on the charging infrastructure were the key factors for effective transition to electrification. Considering the transition to electrification is a precondition for developing manufacturing hub utilizing Africa's share of minerals. Here, we will actively support and participate in such cooperative initiatives. And production in African area is not for export, but also should be consumed in locally. So we have to find the compromising point, how we can utilize local minerals and the possibility of export of their vehicles to outside too.
So, Mr. President, what you're telling us is there is a paradigm shift in the fact that car makers used to come to Africa because of the cost of labor, whatever incentive they could get from government, but now the key issue is how we can integrate the supply chain and how we can have access to these minerals. These minerals are becoming very important for your industry, right?
Yeah.
Okay. Thank you very much. Ladies and gentlemen, we'll open the floor to the room, to much smarter people than me, and to ask 2 or 3 questions because maybe before we have our main event. And ladies and gentlemen, I have to say, because I don't want any conflict of interest and I didn't sign any NDA, I see the hand of the Moroccan Minister of Industry and Trade who was raised. And because I will stay in Morocco and I want to keep good relationships with my government, I feel obliged to give him the floor first. So, Riyad Manzour, you're in to get a question for the very limited power that I have in chairing this panel.
Oh, thank you. Thank you very much. Now, I just wanted to make a precision. Battery value chain is happening already. Since 6 months, we are shipping precams to Korea already.
Fantastic.
And the complete value chain, the first cell will be produced June next year. We are producing already 50,000 electric vehicles per year, and we're going to raise it to 300,000 in the next 5 years. Thank you.
And now let's diversify geography a little bit, and maybe gender as well. We'll have a question from a lady right after this. The gentleman here, please make a short comment and introduce yourself, because I already introduced His Excellency before you.
Yeah, my name is Arkabe. I just want to reflect 2 points. This morning, we have been talking about the difficulties, but I would suggest also to see what has been possible so far, indicating Dangote Industrial Complex, what OCP is trying to do. And also we have to bear in mind IFC, BII, AIB, all development finances have been playing a positive role. So we have to look what has really happened and see how to replicate. Thank you.
Thank you very much. I think everybody acknowledged their positive role. We just want them to give more money to Africa. This would be much more positive at a lower cost. Do we have a comment or a question from a lady, please? And after I'll go back to our friend here on the right. Oh, indeed.
Hello, I am Lala Bayani Sidibe, a representative of the African Governance Institute, a youth leader and a social entrepreneur. I just want to highlight that women have been key players in the African economy, and that's one key thing, whether in the informal sector or the formal sector. And we've not been recognized by our role that we've been playing in agriculture. Women are underpaid for their labor work, and so we should be concentrated on. And secondly, I want to encourage that we do more transaction in our local currency, so it can increase our value in the central bank that will make Africa to be on the map. Because if America is there in the world today, it's because of how much the world transacts with their currency. So if Africa is there in terms of currency, I believe we'll be on top of the world financially.
Thank you very much. I think the Governance Weekend just made the point that Africa is there and here. I'll go to you, Bertrand. You can make one very short comment with the concision that you always use.
Thank you, Bertrand Badré, founder of Blue Like an Orange Sustainable Capital. But I want to make a reference to a report that I led 10 years ago when I was managing director of the World Bank, which was called From Billions to Trillions, famous or infamous in a way. And I think it's very interesting, the pivot we have seen today on stage. 10 years ago, attracting private capital was considered residual. You had a big trillions equation. You discuss who is going to do that. And for what was missing, private capital would do the trick. So you need private capital to kind of fill the gap on an Excel spreadsheet. I think what we see today, and the pivot still continue, and I will comment what has been said on stage, is that private capital, whether domestic or foreign private capital, is not residual. It must become central, meaning it has to change the way all the institutions are operating, the government, the development institutions, etc. And it means everybody has to change the way of operating. So for me, it's a big applause to have this on stage today and an encouragement to pursue. We have to radically shift the pitch and make private capital a central aspect of everything we do. Meaning we have to go from billions to trillions and from trillions to millions to make it effective. Thank you.
Thank you very much, Bertrand, and you've been a strong advocate for this. And I'll have Ndidi as the final comment.
My name is Ndidi Okonkwo-Nwuneli. I'm the president and CEO of the One Campaign. And I really applaud the comments on the panel, and I'm so happy to come after Bertrand because I agree with him totally. At One, we've been focused on changing narratives about Africa. And we really believe that a lot of the success stories from Morocco, and I love what the minister said, are not trickling up. The data we have from the IFC investments in Africa show that over a 10-year period, that the return on investment for investing in Africa has been 6 times the S&P 500. And we collaborated with Jandai here and the Hoover Institute to release that data. But that is not being amplified on the global stage. So my challenge to the panel and to many of us in the room is, yes, there are lots of conflicts, there are lots of crises, there are lots of challenges on the continent, but where there are success stories, how can we amplify them 100x? To change this narrative that Africa is too risky, Africa is a black hole, and it's not worthy of investment. It is time for us to rise, it is time for us to celebrate the positive coming out of Africa and to challenge our governments to build bridges and our private sector to scale rapidly. Thank you.
Wow, thank you very much, Ndidi. Ladies and gentlemen, As you know, there is a tradition in Marrakesh because for everyone, Marrakesh is up close and personal. So I'd like to end this panel by asking each and every one of you a very personal question because we live in an era of uncertainty. And I would like to ask you, how do you unwind? What kind of music do you listen to when tough times come? What sports do you do? What is it you go to when things go completely crazy? When you're trying to finalize a deal, and you, Mr. President, when you have a competitor bringing a new car that is disrupting everything, and you, when you're getting pressured from ministers of finance, and you, of course, when you have an IPO coming, where do you go to in 30 seconds, just so we get this personal flavor before we do the last sequence? Please, Tarek.
I like to play chess. And now with the apps, you can play with people all over the world, and that's quite a nice way to refocus. I'm sorry, I'm a boring guy.
No. I totally recognize you. I can tell you one thing about Tarek Sanhaji is that his motto is move in silence, speak only when it's time to say checkmate. Yeah. Marie.
I exercise, I go running. I have two lovely teenage daughters who are mildly interested in what I do during the day, but more interested in what they do during the day, so that helps me focus. But I also remind myself that our ratings are about signal, not noise, so let's focus on the signal. That helps really focus minds.
Mr. President Song.
Yeah, personally, I enjoy playing sport. In the meantime, whenever I have some disruptions, and I always go back to the customers. And I'm trying to solve the solutions for the pain point of consumers. That gives also a business opportunity to me. So I am trying to find some pain point to be solved. Thank you.
So it's very much focused. Alain.
Well, two things. The first thing is I like football, soccer, but football in Africa. Because my son Jeremy became a professional football player in the US. He plays for LAFC and actually scored a goal 2 weeks ago. So I watched those goals. Go Jeremy! Because I'm a fair soccer player or football player, but my son actually. So the other thing I do, I listen to podcasts. I take the time to reflect, and then when I'm exercising and listening to podcasts.
Thank you very much. And you can give them a round of applause. We're going to take the picture.